Hello and welcome to Training and Compliance News from Cornerstone Credit Union League. My name is Simon State, a fellow student and also the host of this most important informational video that affects your company and all of your members today. Our first topic is an overview of the Bank Secrecy Act, and I'm joined in the studio today by two most prominent leading experts in the subject, Suzanne Yarchevsky, SVP of Regulatory Compliance, Counsel for Cornerstone Credit Union League. I'm also joined by Steve Gibbs, joining us today, Steve as AVP of Shared Compliance Resources. Thank you for joining us today, both of you. Suzanne, can you please tell us the history of the Bank Secrecy Act and how it applies to credit unions today?
Of course, Simon. The Bank Secrecy Act is a set of laws and regulations requiring financial institutions and others to work with law enforcement to battle money laundering, terrorism, and financial crimes. The main law is the Bank Secrecy Act of 1970, which was amended several times, including in 2001 by the USA Patriot Act post 9/11. The applicable regulation was reorganized in 2011 and can now be found in 31 CFR Chapter X. Additionally, NCUA's Rule 748 deals with security programs and BSA compliance. The NCUA rule applies to all federally insured credit unions. The rule requires credit unions to establish a BSA program to assure and monitor compliance.
Oh, thank you. That was very helpful, Suzanne. What are the minimum BSA requirements then?
The program must be written, approved by the board, and reflected in the board minutes. At a minimum, the program must 1. Provide for a system of internal controls to assure ongoing compliance. 2. Provide for independent testing for compliance to be conducted by credit union personnel or outside parties. 3. Designate an individual responsible for coordinating and monitoring day-to-day compliance. And 4. Provide training for appropriate personnel. This is where the annual BSA training requirement comes into play, and that's why we are here today. The main enforcer of BSA compliance is FinCEN, the Financial Crimes Enforcement Network, which is an arm of the Treasury Department. However, NCUA and the state credit union regulators serve as the first level of review for compliance. Should compliance violations exist, the credit union regulator may escalate enforcement to involve FinCEN.
Just tell me, Suzanne, what are the consequences for non-compliance, the penalties? What are those?
First, for standard negligence, up to $500. For a pattern of negligence, up to $50,000. Late CTRs can be $10,000 per day.
Wow.
Intentional conduct, a credit union, its board, partners, directors, officers, or employees can face civil penalties up to $100,000. International money laundering can lead to civil penalties up to $1 million. And for willful violations, individuals can be subjected to criminal penalties of up to $500,000 and imprisonment for up to 10 years. Also, currency and other monetary instruments may be subject to seizure and forfeiture. In short, non-compliance can put a credit union out of business.
My goodness, that's really very helpful. Steve, I have a question for you. Examiners place a significant emphasis on BSA and OFAC risk assessments. What is behind the methodology and formation of effective BSA and OFAC risk assessments?
Looking at risk rating, you have to consider your credit union's risk profile and risk mitigation. According to NCUA BSA examination manual, the assessment of risk must reflect both a current and prospective view of the credit union's risk profile. Management should assess, as examiners, the amount and direction of risk exposure for these 7 types of risk using a supervisory process that assesses things like quantity of risk, quality of risk, management, aggregate risk, direction of risk. Now, the risk assessment should cover the following: your member base and profile, electronic financial services and website, currency transactions, high-risk members and businesses, international accounts if you have those, funds transfers, foreign correspondent accounts, and private banking services, which generally relate to banks. Also, high-risk geographic locations and transactions there. HIDTA and HIFCA, which is the high-intensity drug trafficking area, which you can find at the following website, and the high-intensity financial crime area, which you can find at this website. Also, turnover issues within the credit union.
Suzanne, can you tell us about the Customer Identification Program?
Yes, Simon, I'll provide a brief synopsis of CIP. But for a more detailed explanation, I encourage staff to view Disc 2, which includes an in-depth discussion of CIP. The Customer Identification Program, or CIP, or Member Identification Program, MIP, must be written, adopted by the board, and included as a part of the anti-money laundering program. It must also be appropriate for the size of the credit union and the type of business in which it engages. Details of the CIP program include identity verification procedures, which can be risk-based and require the credit union to form reasonable belief that it knows the true identity of each person. There are also record-keeping requirements in which the credit union must keep CIP-related information. Credit unions must also compare names with government lists of known or suspected money launderers and terrorists, such as the OFAC list and the confidential 314 list, to be discussed in detail on Disc 2. Finally, there is a requirement to provide a customer notice that the credit union will be requesting information to verify identity. This notice is generally included in the account card.
Can you tell us about the identification process in more detail?
As a reminder, we will do an in-depth discussion on Disc 2. But as an overview, credit unions must collect certain identifying information. For natural persons, they must collect the name, date of birth, address, and government-issued ID number, which means a social security number for U.S. persons. For businesses, credit unions must collect the name, address, and taxpayer ID number. Once the information is collected, the credit union must verify that they are who they say they are. This can be done by the documentary method, which, for an individual, means viewing an unexpired government-issued identification, evidencing nationality or residence, and bearing a photograph or similar safeguard, such as a driver's license, a passport, or other such IDs. For a business, the credit union may view documents showing the existence of the entity, such as certified articles of incorporation, a government-issued business license, a partnership agreement, or a trust instrument. When accounts are not opened in person, but rather online or by the phone, the credit union may use the non-documentary method. This can be done by contacting a customer at a given address, verifying information with a customer reporting agency, public database, or other source, checking references with other financial institutions, and obtaining a financial statement.
Can you tell us about the due diligence requirements?
Well, Simon, the customer due diligence or member due diligence concept requires credit unions to go a few steps further than simply verifying the identity of members. This is considered the cornerstone of an effective BSA program. The objective is to enable the credit union to be able to predict with relative certainty the types of transactions in which a member is likely to engage, and to be able to determine suspicious transactions and behavior. Customer due diligence requires the credit union to truly know the member, including what types of transactions would be normal. The credit union may pose questions at account opening about regular transactions, deposits, wires, and other matters and sources of income the member may deal with. For business accounts, the credit union should obtain information on the type of business, normal transactions for the business, financial statements, and other such issues. You should consider the risk associated with particular account owners. Enhanced due diligence may be necessary for high-risk members. Under enhanced due diligence, the credit union should review transactions more closely at account opening and provide continuous monitoring.
Steve, can you provide some insights into CTRs and procedures for filing these documents?
Yes, Simon. In general, someone must complete and submit a CTR for each deposit, withdrawal, or currency exchange of more than $10,000. Also, multiple same-day transactions at any branch treated as a single transaction if by or on behalf of the same individual for over $10,000. CTRs must be filed electronically within 15 days following the transaction. Currency transactions in and of themselves are cash deposits, cash withdrawals, cash payments on a loan, cashing of a check, purchase or redemption of a share certificate, savings bond, money order, wire transfer, traveler's check or cashier's check, purchase or cashing in of securities, exchange of currency, for example, using cash to purchase larger denominations. Someone must verify and record the name and address of the person making the transaction, along with identity, account number, and Social Security or taxpayer ID number of the person on whose behalf the transaction is being made. Aggregation in and of itself involved with CTRs are multiple transactions during the same business day totaling over $10,000 that include deposits, withdrawals, exchanges, deposits plus exchanges and withdrawals, plus exchanges. Deposits made at night or over the weekend are considered a transaction on the next business day.
What are the methods of money laundering associated with currency and CTRs?
Simon, structuring, where a person acting alone or in conjunction with or on behalf of other persons conducts or attempts to conduct one or more transactions in currency in any amount at any one or more financial institutions on one or more days in any manner for the purpose of evading or reporting requirements. They're smurfing, using multiple individuals to make deposits in increments of less than $10,000 for purposes of circumventing the CTR requirement. Placement, the process of placing through deposits, wire transfers, or other means of unlawful cash proceeds into traditional financial institutions. Layering, the process of separating the proceeds of criminal activity from their origin through the use of layers of complex financial transactions, such as converting cash into traveler's checks, money orders, letters of credit, stocks or bonds, or purchasing valuable assets such as art or jewelry. Then there's integration, the process of using an apparently legitimate transaction to disguise the illicit proceeds, allowing the laundered funds to be dispersed back to the criminal. Different types of financial transactions, such as sham loans or false import-export invoices, may be used for this purpose.
Must a CTR be filed on every transaction?
In most cases, yes, except in situations where you have exemptions which allows a person or business to be exempt from filing a CTR for each transaction made, usually for cash-intensive type businesses. CTRs are not required for transactions involving Federal Reserve or Federal Home Loan banks, domestic financial institutions, which include credit unions, U.S. departments or agencies, any state or political subdivision of a state, and domestic corporations listed on one of the national stock exchanges, for instance, the New York Stock Exchange, American Exchange, or NASDAQ, excluding small capitalization listings. SEC's Edgar system can be used to determine if a company is listed. Also note that one-time designation of exemption no longer needs to be filed for institutions serving as cash providers.
Suzanne, what is a suspicious activity report, or a SAR?
BSA requires credit unions to file a report when they suspect a violation of law or regulation. There are several thresholds for required reporting of SARs. First, when a transaction is conducted or attempted and involves at least $5,000, and the credit union knows, suspects, or has reason to suspect any of the following. First, the transaction involves funds from illegal activities, or is intended to hide or disguise such funds as a plan to violate or evade federal law or regulation, or to avoid reporting requirements. Second, the transaction is designed to evade BSA requirements. Or third, the transaction has no business or apparent lawful purpose, or is not the sort in which the particular customer would normally be expected to engage, and the credit union knows of no reasonable explanation for the transaction after examining the available facts. A SAR must also be filed for transactions aggregating $25,000 or more, even if a suspect cannot be identified. Additionally, insider abuse for any amount requires the filing of a SAR. Credit unions are not required to file a SAR for a robbery or burglary if it was reported to law enforcement. For transactions below the threshold, a credit union may file at its discretion.
How do credit unions file these SARs?
Credit unions are now required to electronically file SARs on FinCEN's BSA e-filing system. A link to the e-filing system can be found on FinCEN's website. Disc 2 includes a detailed segment on filling out the SAR, but in short, the form requires the details of the activity in question. In other words, the who, what, when, where, and why. The form gathers details on the persons involved, accounts involved, dates of the activity, and whether a pattern of activity exists.
Tell me, Suzanne, is there a timeline for filing a SAR?
Yes, Simon. SARs must be filed within 30 days after discovering the suspicious activity. FinCEN guidelines suggest credit unions file SARs on continuing activity at least every 90 days.
Suzanne, can you describe typical examples of suspicious activity?
Suspicious activity is a broad concept, basically any unusual behavior or efforts to violate or evade the law. Some examples include structuring transactions, which means conducting several transactions just below the CTR reporting threshold of $10,000 to avoid the CTR filing. Other examples include the use of suspicious identification documents or the inability to verify identity, reluctance to provide identification or information in connection with an account setup or a transaction, unusual wire activity, fraud on checks, loans, credit or debit cards, embezzlement, identity theft, or elder abuse.
Must the credit union board be notified of suspicious activities?
Yes, the board must be notified promptly, at least monthly, such as at the monthly board meeting. The credit union should share general details about activity so the board is aware of risk. However, it is not recommended to share the actual SAR paperwork due to confidentiality concerns. We don't want the SAR getting into the wrong hands if it is inadvertently left somewhere.
Tell me, Suzanne, can the credit union tell a member about a SAR?
Absolutely not, Simon. SARs are highly confidential. The credit union must not tell the subject of a SAR that the SAR has been filed. SARs must be kept confidential within the credit union as well. Share information only with staff needed to fill out the form or monitor the activity. SARs should be stored in a secure area. There is a safe harbor for sharing information related to the SAR with law enforcement, including FinCEN, federal, state, or local law enforcement agencies, FBI, IRS, as well as NCUA or the state credit union regulator.
Steve, can you tell me about monetary instruments and how they should be handled by a credit union?
When a member purchases a draft, cashier's or teller's check, money order, or other similar instrument in an amount of $3,000 to $10,000, the credit union must record the following information: the member's name, the date of purchase, type of instrument purchased, serial number of the instrument purchased, the dollar amount of the transaction. If the purchase is made by a non-member, the credit union must retain a record of the above or the aforementioned information and the purchaser's address, social security number, and date of birth. Now, Simon, they must refuse a purchase if the purchaser does not provide the information at the window or through previously verified records.
Suzanne, can you tell us about BSA requirements for wire transfers?
Well, Simon, the travel rule requires the credit union to include certain information in payment orders relating to transmittals of funds of $3,000 or more, whether or not currency is involved. In other words, certain information must travel with the wire. The originating institution must include and send with the order certain information, including the transmitter's name, account number, and address, the identity of the transmitter's financial institution, the amount of the transmittal order, and the execution date of the transmittal order, as well as the identity of the recipient's financial institution. If received, the transmitter's financial institution must also include the name, address, account number, and any other specific identifier of the recipient. Also, the credit union must verify identity of the sender. For credit unions sending wires for members, those members have already been identified through the CIP process.
Tell me, Steve, what should credit unions know about information sharing?
Section 314A of the USA Patriot Act allows for information requests from the government through FinCEN. All credit unions are required to give an email address on their call report for this purpose. These information requests are confidential and should never be discussed with the member in question. Section 314A provides for a listing of persons of interest sent to a designated contact in each financial institution every 2 weeks. The list is checked against the listing of members or customers, and if identification is made, FinCEN is contacted. Section 314B provides an online forum which allows for sharing of information with regard to BSA. Signing of the form is mandatory. It allows for submission of one's financial institution's intention for a period of 1 year, beginning on the date of notification, to engage in the sharing of information with other financial institutions or associations of financial institutions regarding individuals, entities, organizations, and countries. Now, Simon, with regard to law enforcement requests, it's not the credit union's responsibility to investigate or confirm that a crime may have been committed or occurred. Policies and procedures should address contact with and handling of these requests from law enforcement organizations.
Suzanne, another question for you. What do credit unions have to do about record retention?
BSA requires credit unions to maintain records so law enforcement can reconstruct transactions. The general retention period is 5 years. Credit unions must maintain the original, microfilm, copy, or reproduction of documents. The credit union policy should address the detailed list of documents required to be maintained, including but not limited to SARs, CTRs, and related documentation, CIP information, information related to funds transfers and wires, signature cards, statements, records of loans over $10,000.
Thank you, Suzanne. Thank you, Steve. That wraps up our overview on Bank Secrecy Act. Thank you for watching. Staff should take care to watch the second chapter on this disc covering the required training on OFAC compliance. Thank you.